Let's bring in the Assistant Professor of Economics at George Washington University. Stephen Hamilton is with me, a regular on this program. Stephen, thank you for your time. What did you make of the RBA decision and the bank's response, as Ross articulated there? It was pretty quick and no real criticism either in terms of their response.
Yeah, look, I think the RBA got it right. You know, I think a 25 basis point move is about right. And I think it could have been bigger. I was calling for sort of 0.4 percentage point increase. Some thought it would be 0.15, right? So they kind of went the Goldilocks solution in the middle. I think the key is if the Reserve Bank had seen that very high inflation number when they met last month or the month before, for sure they would have raised rates, right? So I don't think there was any doubt they were going to do what they did yesterday, and it's absolutely right. And to some degree, they have to make up for lost time. Now, of course, the banks passed it through. I heard you talking to Ross. You mentioned, you know, the stresses on households. The thing to keep in mind is, to the extent that those interest rate rises put pressure on household budgets, that actually means that interest rates need to rise less to have the desired effect on demand and cool the economy. So I don't see, you know, no one should expect interest rates at sort of 7%, but I think interest rates in that sort of 2 to 3% range within the next 12 months, I think makes a lot of sense.
And Stephen, let's talk about this in the context of the Treasurer's debate today. I spoke to Stephen Jones earlier about this. I know that you've made some comments as well in terms of the spending in the recent budget, largely supported, in fact, supported in total by Labor. The fuel excise reduction, the other payments, the LMITO, the low and middle income tax offset continuing. In total, we're talking more than 1% of GDP into the economy from the budget. That's inflationary, isn't it?
Absolutely. So, yeah, and I think we talked on budget night, Kieran, if you could remember, the line I wrote at the end of my piece in the Financial Review was, if the Reserve Bank raises rates during the election campaign, the government will only have itself to blame, right? So it's not to say that this whole thing is the government's fault. It's not to say that interest rates weren't always going to rise. That's all true. The interest rates have to rise. They have to go back to normal levels. The point is, the economy is at capacity. That CPI number, in underlying terms, even trimming out the extreme influences of petrol prices and other things, is already well above the Reserve Bank's range. That says the economy has hit its speed limit, right? So the last thing you want to do is, when an economy is at its speed limit, unemployment's at 4% and prices are rising, is to put more fuel onto that fire. And what we saw in the budget, after last year's budget, when you put all of that stimulus together, over the next few months, we'll see 1% or more of GDP and stimulus going into the economy. And that's exactly the wrong time to do that. Unfortunately, the politics of the situation mean it's a bipartisan commitment. So both sides are going to have to wear the consequences.
The deeming rate for pensioners has been frozen. This is the government's announced this today in a statement. Essentially guaranteeing the payments for 900,000 seniors off the back of that RBA move yesterday. It makes political sense. Does it make economic sense?
Look, I don't want to be the first person to go out there and attack pensioners, but you have to understand that pensioners have the most generous form of indexation of their pension of any welfare recipient in the country, right? They receive this sort of complex formula, giving them far more rapid increases. So the cost of living impact is already factored into their payment. The deeming issue is to go after the interest rate rise. Look, it's an election campaign. It's exactly what we would expect. But at a time when we have a big structural deficit, where we have all of these inflationary pressures, what I want to see from both parties is what you're going to do to reduce spending, to reduce that pressure. And again, everyone's moving in the wrong direction.
Stephen, great to chat as always. Thanks.